Alright investors, welcome to today's stock breakdown. We're diving into two companies' earnings reports. The first one is AMD because while the numbers look solid at first glance, the stock took a hit in after hours trading, dropping over 4% and taking the stock below $114. So what exactly happened? Let's break it all down, starting with the positive news. We actually did see that there was a solid earnings and a revenue beat. Also, AMD outperformed expectations in key financial metrics, such as earnings per share, which they reported $1.09, which actually is slightly above the expected. Also, revenue came in at $7.6 billion, exceeding projections of $7.5 billion. So actually, these numbers are actually pretty good, but there's more to the story. Now let's review the concerns on investors. The data center revenue hit $3.9 billion, which is a new record, but missed projections of $4.1 billion. Now, if we talk about the gaming and embedded segment side, both actually declined, which wasn't entirely unexpected, but still worth noting. Now, one of the biggest concern is the AI competition, because while AMD is pushing hard into AI with its new MI300 chips, investors are still unsure if they can go head to head with Nvidia, which is now the dominant player in the AI GPUs. So the question arises, what is next? Right now, AMD is still staying bullish on 2025, forecasting on the first quarter revenue of around $7.1 billion, which is slightly ahead of expectations, and the CEO, Lisa Su, remains confident that high-performance computing and AI will continue driving growth, which means for investors out there that AMD is still a strong player, but its AI growth needs to prove itself. Definitely there's going to be a short-term volatility and it's expected, but long-term investors may see this dip as a chance to add shares at discount. So what's your take on this? Are you buying, holding, or selling AMD? Definitely all this news had a big spike on memes towards AMD investors, but again, this is a battle that has not ended as we speak. Now let's talk briefly about Google, because they released their fourth quarter earnings report and the results have sparked a strong reaction from the market. As you can see, there is a big drop and it's attributed to concerns over the slight revenue miss and increased expenditure, particularly in AI investments. It looks like Alphabet is pouring billions into AI, leading to higher expenses. Also, Google Cloud revenue growth fell to 35%, which is lower than anticipated. And adding the fact that the revenue was $96.4 billion, missing just below the anticipated $96.6 billion. So as I mentioned, Alphabet has been investing heavily in AI to enhance its search capabilities and cloud services. Now let's remember that in 2024, the company allocated around $50 billion to capital expenditures, which plans to increase this investment in 2025. So having that said, while these initiatives aim to boost their long-term growth, they have raised some concerns among the investors about the potential impacts on profitability, which definitely will cause some short-term volatility, which essentially is causing analysts to maintain a cautiously optimistic outlook on Alphabet's future, because the company's strong position in digital advertising and its expanding cloud services are viewed as positive indicators. However, ongoing regulatory challenges and increased competition in the AI space are factors that could influence future performance. So now the question arises, is it a buy or a sell? Let me tell you that for long-term investors, it can be seen as a buy the dip, because if you believe in Alphabet's AI innovation, cloud potential, and digital ad dominance, this dip could be a buying opportunity, because let's not forget that Alphabet remains one of the most powerful tech companies globally, which is something that would not be ignored in the future markets. Now, for the short-term traders looking for quick gains, Alphabet's regulatory risks and spending concerns may continue to pressure the stock, which means that holding off for more clarity on AI execution could be a safer move. But pretty much to summarize everything, if you own the stock, there's no immediate reason to sell unless if you're worried about further declines in cloud or in the AI execution. But honestly, on the long term, the company remains a strong player in the tech space. This is definitely a buy the dip opportunity for long-term investors, but could remain volatile in the short term. Let's remember that right now the markets are extremely sensitive at current valuations. A slight earning miss or soft guidance can trigger major volatility. And that's pretty much what we saw today, not only in Google, but also AMD. because they had strong earnings, but apparently not good enough for Wall Street. Let me know your opinion on these two important stocks in the comment section, and see you guys in the next video. Don't forget to subscribe for daily updates. Thank you very much and have a good day.